got to understand that people don't necessarily invest in projects first. They invest in people first. So if you're likable and you're coming across and your branding and the way you put content out there, people actually have to like you. Typically, they're going to invest with people they like.
This episode brought to you by Suites at Madison. Meeting and conference rooms for rent by the hour, week, month, or year. Suites at Madison, where business gets done. Check them out at www.downtowntampaoffice.com. Now, on to the show.
You are listening to the Invest Florida Real Estate Show, covering topics in lending, buy and sell strategies, property management, hot markets, and tips and tools to guide you along the way on your path to real estate success. You want Florida investment real estate talk? You have come to the right place. And now, our hosts, Eric Odom and Steven Silverman.
Hello and welcome to another episode of the Invest Florida Real Estate Show. This is your co-host, Eric Odom, along with Steven Silverman. Steven, I believe, was on hiatus last episode. I think, where did you go? You don't even remember.
I don't even remember. That was last week.
It's like so many vacations you take.
Who remembers last week?
I never know which day which month you're going to take off next. It's good to be Silverman.
Hey, listen, I don't remember it, so it doesn't affect me too much.
You must have either been in Colorado, California, or Washington then if you don't remember. But
anyway, it's like great always to be back. And, Eric, we're boots on the ground. We're out there every day talking to interesting people and learning interesting things. We're commercial real estate brokers. So we hear so much, we learn so much, and this is just such a fun way for us to share the information we get.
Yeah, and we're approaching the end of the year here where things will start to slow down after Thanksgiving. So we'll have plenty of time to go take some breaks. And that'll always be breaks. It's a relative term, right? We won't actually be able to leave, but we'll be able to get caught up on some things we're not able to do during the busiest times of the year.
So, Eric, usually like around about this time, we see if we get a review or something because we try to put out the podcast, and it's always interesting to hear what people say. So,
it's not just interesting; it's important because when we tell this story all the time that it takes about 5 touches, introductions. Many of our guests come from introductions. People will, listeners will say, "Hey, I think you need to talk to this guy or that guy," and we try. We reach out to 5 people, and one of them will say yes. And so there's a lot of time and energy to go in to get to produce the show. And if our listeners can help with that, it's terrific. But one of the ways, if you don't know folks that have a story to tell, you can leave a review. And what happens is when people are doing due diligence, if they're going to invest time with us and come on the show, reviews help us to attract more guests. So those folks over the years, the 100 or so folks that have left the reviews over the years, we're definitely appreciative of you guys. And we got a review here that we'd like to read to you, as we do all of our good reviews. We read the bad reviews too.
We don't read the bad reviews.
Actually, we do. I love reading the bad reviews about Steven. Don't review the review.
We never got one about you, right?
We've never had bad reviews about me. But I do want to thank Green Man, who left a review just a few days ago. It says, "Thank you for bringing on informative guests with experience and practical knowledge. It's exciting to listen to and fun to play Monopoly in my mind with you guys rolling the dice. Keep up the great work." Green, really appreciate that comment. And all the other folks, as I said, it does help us, every bit so small, in helping people to convince them to invest time with us on the show and give wisdom to you guys. So it's much appreciated. Steven, today we've got a repeat guest. Very interesting guy. He's going to talk about some syndication. We'll talk about the real estate, the multifamily market. And I think you guys are going to like him. He was a great hit the first time we had on. Is there anything else before we get rolling with Bryan?
I think we'll roll right into Bryan. Today we have with us Bryan Chavis. Bryan is the founder of Chavis Capital, a private equity firm that specializes in multifamily acquisitions. Bryan is also a best-selling author. Simon & Schuster published his book, Buy It, Rent It, Profit. He is only one of a handful of authors with a book in the U.S. Library of Congress. Bryan is the founder of Bryan Chavis Coaching and Consulting. Bryan, welcome to the Invest Florida Show.
Man, it's good to be back, guys.
I know, episode 149. It's been almost 2 years. I really appreciate you taking the time with us to sit down and chat with us and give us an update here, Bryan.
Absolutely. Thanks for having me again, guys.
Yeah. Hey, Bryan, just before we started, it was great to see you a couple of weeks ago. We sat on a panel together, and it was funny. I had Bryan sitting next to me, an economic summit panel, so he helped kept me laughing and kept me awake, but it was pretty cool.
Good.
I'm trying to figure out how a prestigious guy like Bryan Chavis ends up on a panel with you, Stephen.
Well, I figured it like this: if they asked me to be on the economic summit panel, then the real answer is it's time to sell.
It is time to sell.
There you go.
But it was interesting. Like, we were sitting there, and like when you see all those people out in front of you, and you see some of the eyes start to glaze over, it's usually I'm one of them sitting there with my eyes glazing over. So it was nice to see it from that perspective.
Well, listen, I mean, anybody who's not had a chance to listen to episode 149, we'd encourage you to go back. That was our first chat we had with Bryan. Very inspiring story of how Bryan got into this business, and I think it will kind of help you understand a little bit more about our conversation that we're going to have today, which is going to be covering sort of like the next level type of stuff. Bryan got started in this business quite some time ago, and came through the school of hard knocks. I mean, he's a guy who really, it wasn't like he was handed this on a silver platter. He's had to earn it. And he's been through a lot of peaks and valleys here in his life, and to arrive to where he is. And so I would definitely write it down and go back and listen to it later on episode 149, Bryan's original conversation with us. Bryan, why don't we talk a little bit about the market on the multifamily side? What are you seeing right now? What are you doing? Are you active? Are you actively purchasing? What's happening?
Yeah, that's I'd like to think of myself as active. Of course, I've submitted 1 or 2 LOIs this week on portfolios that consist of projects in the downtown St. Petersburg area. Kind of trying to stack my chips there with the current project I have, Park Plaza. As far as the market is concerned, for me, the possible headwinds of a stagnant economy. We kind of talked about that on that panel, Steve. And people argued whether or not they thought, there would be, I mentioned an inverted yield curve, and then another panelist was like, oh yeah, but it was only a blip.
I think we both got shot down, right?
Yeah. Well, I question whether or not shut down. I like to let people talk, especially on those panels, because a lot of those guys, that's their highlight, is jumping on that panel. And, sometimes it's best just to let people talk, because you give them enough rope, I begin to really understand, their philosophy. And I kind of also understand, who's a salesperson and who actually owns property. Right. And I don't mean that in a negative way. I'm not trying to call anyone out, but it's just fact. Right. If I just listen to you talk long enough, I can kind of figure out whether or not, I was always taught in the art of negotiation is all you have to do is be a better listener than you are a talker. Mm-hmm. And you figure out how the other person gets paid, and that's how you begin to negotiate. Yep. And I kind of, I use that methodology all the way through. I'll let you sit and talk. I threw something out there and said, hey, an inverted yield curve, but I didn't really go into depth and say what I thought, or, I just mentioned, hey, look, we had an inverted yield curve. He decided to take it a step further and kind of, poo-poo on what me and you were talking about, Steve, when you didn't mention it up. Yeah, but it was only a blip. Here's the thing on that, because your listeners probably should know. If I'm a quarterback, okay, I'm going to break this down into sports analogies. If I'm a quarterback and I'm coming to the line of scrimmage, and I'm beginning to go through my progressions, and I'm getting under center right now, and I'm looking, and I see the DBs, the defensive backs, start to move forward. To me, it's indicating a blitz. This is just basic 101. So I'm thinking, so right now they're indicating blitz. They're cheating. They're coming forward. Whether or not they come forward or not, whether or not they blitz or not, I have to then play chess. I have to then see that these DBs are moving forward and alert my wide receivers and my linemen to, hey, 25, 36, and call out their number and show that my linemen, hey, look, to be able to possibly change coverages or blocking assignments. Whether or not they blitz, my linemen need to be aware of it. So I guess my point is, whether or not it was a blip, if I'm an investor and I'm under center, I got to be aware of it, and I have to adjust accordingly. So the fact that somebody says, oh, it was only a blip, clearly shows me that he doesn't have any money invested in the market or trying to raise money. I do. And if I'm going to raise money and I'm going to put my foot into projects and I'm going to call plays, then I have to be aware of everything. So if a DB starts to show whether or not he blitz or not, I'm going to, it's chess.
Right. And
I'm going to check out of a certain coverage, and I'm going to make sure that, if he comes, somebody's aware of it, and I'm prepared. So if we have some headwinds in this economy, obviously I'm underwriting and I'm forecasting for that. So I'm looking at pro formas a little differently now. So I'm looking at, okay, I'm getting $999 for a studio apartment in downtown St. Pete. But if there's some headwinds, if I have to push back and I have to drop down to $950, can I still operate? So now I'm having to look at these things, when I'm underwriting, just because of the possibility of an economic downturn. So, these are the things that, for me, that I have to take in consideration, whether or not it was a blip or whether or not it happens or not. I still don't want to get caught, underwriting or taking on the project and basically catching a dropping knife.
Yeah, it's game theory 101. I mean, if as you say, the cornerbacks move up, you've got to react to that. And
you have to.
You have to.
It'd be stupid to sit there and continue your play calling and seeing something. And obviously, coach will pull you out of the game. You won't be in the game long if you're not able to recognize it, whether or not the blitz comes or not. But if you're a quarterback and you're not, and that's what a syndicator is, are they not?
Yeah.
You're the quarterback. You're the general partner.
Yeah.
So these partners are going to look at you on the sideline and be like, hey, look, you clearly these guys were cheating and they were pushing forward. Clearly there was some tall tale signs of some headwinds. You still underwrote and bought this project at X. Why didn't you plan for that? So,
sure. Yeah. So what's going on with the market now? I mean, what are you still being able to get deals done? Or are you just submitting letters of intent, hoping to get deals done?
I try not to just submit a letter of intent. I always have, the intent to close. But of course I have to close based on my terms. Just because you say the property's worth $16 million, you feel like it'll trade at $16 million at a 4 cap doesn't necessarily mean that that's what I'm willing to pick it up at. So, here's my offer, and I may come in at 12, 14, but here's my reason why. And I usually send snapshots of my underwriting so they can see that I'm not just, blowing smoke and just putting LOIs out for the sake of putting LOIs out, that it's well thought out, well underwritten. And then usually I sit back and, tell the seller, to show me where I'm wrong. If I'm wrong, show me where I'm wrong. And that's kind of that's the methodology. But right now you're getting pushback because there's, the market is what it is. You're competing with a lot of, things are global now. You're competing with individuals that may be coming from out of the country, that may be coming from out of the state, and they may feel like a 4 cap or 5 cap is something that is intriguing to them, especially in a core market like downtown St. Pete and Old Northeast. So, you're competing with that. So they may look at me and say, oh, yeah, forget that LOI. Let's sit and wait for someone from San Diego or California or, offshore to submit and pick up this. And that's kind of really what I'm facing is dealing with, a global competitive market versus, localized, where people are like, oh, yeah, those are extremely low cap rates. What's low to us may not be, may not be low to someone, out of state.
Yeah. So, we just had a conversation with Neil Bawa just a couple of episodes ago talking exactly about this, that if you've got negative interest rates and they're giving negative interest rate loans in Holland and cap rates are 1 there, if you're an investor in Holland, you're going to be looking for opportunities of where you can earn a return, any return. And the United States is still offering that. And places like Germany, and you've got the overhang of Brexit and a number of other things that are going on around the world. Japan, forget about it. Japan's in has been a deflationary environment for some time, and zero interest rate environment. And so a lot of these investors are picking their heads up to look around to say, I can no longer think about my own home country anymore because there's nothing to earn. Our stock market's still strong. Relatively speaking, our economy is still strong, even though we're starting to see signs. We're seeing signs of recession in the manufacturing section and some softness in other areas. We're still earning a return, which is a lot more to be said than in places like Japan and Germany and Holland right now.
Denmark took it another step. They actually had a situation where they had the bank was paying. It was a negative mortgage.
Yeah.
The bank was paying people to take out a mortgage with them. But what Eric just said is really true, because CBRE put out a report and they said that investment in triple net properties from overseas is up 70% this year. So it's real and it's happening. So what you're saying is really out there. And so in terms of the types of properties that you like to invest in, are you still finding product out there with cap rates being pushed so low, or products that you feel comfortable acquiring for your investors?
And that's a good question, Steve. The answer is probably not at face value of what the seller, I'm not answering the bell of the seller. I really kind of ignore the price. I know CBRE really doesn't put a whisper price out there. They just put an offering out there and they say, hey, listen, make us an offer. And then that's kind of why I always send my underwriting with my offer or my LOI. But really, you kind of have to ignore what people are asking and then just submit based on your criteria. And, right now that's just the environment we're in. I mean, I'm really realizing now the value of off-market deals and kind of switching my thought process to basically offering cash to investors and property owners right now, saying, hey, look, those who want to get out, offering them cash and trying to get to a lot of these projects before they actually hit the commercial guys, because by then, there's limited meat on the bone. So being able to come up with strategies to be able to offer cash, to some of these projects, and typically that's going to happen under 80 units. Obviously, you're not going to be offering cash on institutional grade assets, but you also don't, sometimes will not see some of the overstatement on poor pro formas like you do on institutional stuff is typically underwritten a little better than some of the stuff you see with the smaller owners who are trying to really just cash out and get as much as possible. Not that you can blame them in this market, but so there, I'm finding it tough to find those deals when they've reached a commercial broker. So just coming up with strategies to be able to get to the individuals before they get to the commercial brokerage, and being able to offer those individuals cash are some of the strategies that I'm forced to have to come up with to be able to try to find certain projects. And now I'm looking at, okay, ideally I'd love to have a 200 to 300 unit apartment building, but realistically, is that going to happen in this market? I may have to get clever here and learn how to stack and, take, 2 or 3, 30 to 40 units, put them together in a certain market or a certain area and begin to stack and create the economies of scale with the focus of either refinancing the project as a portfolio and or selling the project, as an exit strategy as a portfolio. And the reason why I mentioned that is the importance of making sure you stay within a certain radius and a certain asset type to be able to have it either underwritten for refinancing or sold as a portfolio. And its attractiveness to the next buyer should be a concern for any syndicator moving forward. Is what does this look like for the buyer, or what does this look like when the opportunity comes for the refi?
Yeah, you almost have to do that in Pinellas County because most of the apartments, in terms of numbers, are less than 50 units. It's not like Tampa where apartments are institutional grade primarily in terms of the numbers.
Right.
And so you got to stack that. You get a lot of these 30, 40, 50 units over in Pinellas County. They tend to have been built quite some time ago, and you're able to stack them and keep them close together because what you're talking about, Bryan, in terms of stacking. Trying to buy an apartment in Orlando, one in Naples, and one in Tampa is not really doing you a lot of good because your property
that's not
manager,
stacking.
Yeah, it's not stacking. Your property manager
Exactly.
can't cover that amount of ground if something's happening. It's impossible.
Exactly.
Yeah.
I was reading a coaching article, trying to stay up on my craft and hone my craft. And one of the guys that was a leading coach expert and small business coach was explaining that, hey, look, I used to be a franchise guru, and he used to say the one thing that franchises won't tell you is that you're not going to get rich owning one franchise, and you're not going to get rich owning multiple franchises spread out. You have to own multiple franchises within a certain mile radius, and that's how you build wealth.
Sure.
And really, I'm like, that's smart, and that's kind of the same methodology that I'm approaching when it's like, okay, well, I can't get to institutional because it's either overpriced and or for whatever reason. So I have to come up with a way to stack. But if I stack, then I have to be smart about the way I stack, because if you're outside a certain radius, then the stack really doesn't work. You're not able to benefit from the economies of scale, and you're also not able to benefit on the refi or the resale. So if someone wants to buy your portfolio, it's going to make it that much less attractive. You have to have some sort of strategy, when you're creating this stack. So it just presents a whole new way of underwriting and a whole new way of syndicating. But there's not much, when you really understand things from an operational standpoint, I really feel like that gives me, Chavis Capital, a leg up, because a lot of people can be fooled and say, oh, no, I could do Sarasota and St. Petersburg and maybe a Lakeland property, Polk County or something like that, or Orlando, and be fooled because they feel like technology has come so far that they're able to, to pull these portfolios and kind of wrangle them together and put them on the same reservation, so to speak. But anyone who's really sound at operational or has, are rooted in the day-to-day operations, they'll kind of, they'll shoot that idea down and come at it with a much more realistic approach. So, for me, that's where, really falling back on the fundamentals of being a great property manager and asset manager, and understanding what those cycles are, are key.
So Bryan, talking about the property management and asset management side, when you're thinking about purchasing a property, how does that factor into when you syndicate? Like, what mistakes or do you see people making when they syndicate, or what tips can you give people who want to be syndicators? There's a lot of information out there, but you're approaching it from the practical side.
Yeah, that's a great question, Steve. I think, for the most part, I can really only articulate from, my personal experiences. So, when I mention this, it's basically what I've seen actually being under center, using that quarterback analogy and not watching it from TV, and being an armchair quarterback. I'm kind of giving you, what I feel is going on. But I think a lot of the shortcomings and that I see are individuals really, again, not really mastering the craft of day-to-day operations and understanding, hey, look, the syndication game is really exciting and really fun. But guys, there is way more to syndicating than just underwriting. And that's kind of what I see in the headlines. Everyone just is really infatuated with the underwriting process and the investing process and the evaluation of markets and neighborhoods and demographic and psychographic. And, but damn it, somebody's got to show up on Monday through Sunday and run their property. They have to understand what their prospect tenants' demographics are. The buildings don't pay rent, people pay rent. So someone has to understand who the prospect tenants are, who the tenants are going to be. Somebody has to run day-to-day operations and really keep their finger on the pulse. But I think, with things being so, frothy, if that's a word, that I've heard used, things are just, everything is just so good right now. The music and everyone's is dancing. No one's really had to operate, at levels where they really had to roll their sleeves back and focus on day-to-day operations, as a syndicator. Everything has been real good for a lot of syndicators. They buy the property, they run it, value add, 2 years later, they refi, they get the money back to their investors. And yeah, and the music's playing and everyone's dancing. Everyone's having a good old time. The bar is still open. Everybody's drinking and having a good old time. But right now, no one really understands how to operate. I do. I was there in 2008. I know how to operate with headwinds. And when it was in 2008, I was working as leasing agent and a assistant manager and property manager, for over 2,000 units, a portfolio of over 2,000 units. So I understand how to operate in multiple levels. So I kind of understand and feel like, that, hey, look, the music's not going to last forever. You need to really understand the operational side of things. And so I would say syndicators need to focus on that. They need to focus on understanding, the latest and greatest in technology, to be able to understand how to, pull the syndication together. And then on the back end, what does it take to run a syndication business? Being able to get the reporting as an asset manager, being able to handle your property managers and have the right types of reporting coming to from the property management, from the boots on the ground to the asset manager then pushing that content or that information to their investors. How is that done? What is the process? Is there a website? Is there, where are the investors able to go and at a glance keep an eye on their portfolio, what they're invested in, and see what your projects are currently, what you're thinking about doing. So there's a lot of the back end that that has to be thought out. And again, this is a business, so being able to keep that ecosystem in place is something that that individuals I feel need to strongly look at. But I would say the most important is that property management, asset management piece, really understanding what it takes to run these properties.
Yeah, so it's not just about sitting in your office and waving a magic wand. You actually have to have some boots on the ground, some strategies. So that's the first one you think that maybe syndicators will overlook and maybe take a little bit for granted. How about money? Is that ever an issue for syndicators in terms
Absolutely.
And
because I feel there comes a point where you're going to run out of friends and family.
Yeah.
So now you have to build a brand and you have to be able to raise money. And you also, and you got to understand that people don't necessarily invest in projects first. They invest in people first. So they're going to invest in you first. So, if you're likable, and you're coming across and your branding and the way you put content out there, or however it is you choose to let people know you exist, people actually have to like you. And typically they're going to invest with people they like. So just understanding, how to put content out there, where to deliver content, how to legally raise money. Obviously there's I'm not the attorney, but there's various different 506B and C offerings that are, that kind of tell you exactly how you can go about raising money. So you have to have your right exemption and have your right legal team in place. But even once you've done that, your ability to jump on social media and advertise what it is you're doing. There's various different styles you see from various different thought leaders out there. But at the end of the day, you got to really feel comfortable with what you're doing and your ability to raise money. I see that these meetups and doing socials like what we're doing, that works for me. Putting people in a room, allowing them to have some beverages and some food and getting to know them on a personal level and allowing them to get to know me on a personal level is the way we want to approach dealing with our high net worth, clientele. Not necessarily pushing a project down their throat at this particular time, but just, breaking bread with them. And then if it leads to, hey, yeah, talk to me about your project. We're interested in multifamily. Then it may lead to a meeting or a conference call or a Zoom call, and then we can go over the offering memorandum. But, that works for me. But the idea of just being able to, to articulate the project from point A to point B is going to be really important as you move out of friends and family and start moving into a space where you're raising money from individuals that may not know you and you may not have a brand. So really focusing on that, how to, move forward with your brand is important on the raising money side.
As you're talking to these investors and every investor is different, but what are you finding that's important to them? Are they looking for a time horizon? Are they looking for a return on investment? Like what cap rates do they want?
That's great. Great question, Steve. I see that changing. So now for me, my speech is more so efficiency, because when you're talking about these lower cap rates in the realm of 4 to 6, these are not really all that attractive cash on cash returns. So sometimes you're, depending on where you're investing, in your model, you're not promising these elaborate returns. It's a matter of opinion as far as returns, how elaborate they are, 8 to 12, 8 to 14. If I'm saying, hey, look, our returns are going to be anywhere between 6 and 8, cash on cash, IRRs anywhere between 12 to 14. Really what you're pushing is being in a core market, the efficiency. And, I think people really have to understand, all you hear is people talk about IRR, but really what is IRR? You don't really hear people talk about it. IRR is a measure of efficiency from, how I was taught, and I was taught by some of the best minds in the multifamily industry. I mean, it's a measure of efficiency. So you're basically telling the individual, I can have 2 IRRs that are the same 17%, right? But one will return you $200,000 in 10 years, and another will return you $10,000 in 10 years. And, both same timeline, totally different returns at the end, but one pays you 0 for 10 years and then gives you 20,000. One pays you 150 a month and then gives you 10,000 at the end of the 10 years with an investment of $250. I'm just throwing numbers out. Don't check my math. I'm just trying to make a point. But they both will have, let's just say, a 17% IRR. But they're the net, when you look at net present value, if you look at the deal in itself just for face value, we all know that those are 2 totally different deals. That something ain't right. That's not telling the whole picture. They're both not, it doesn't tell the whole picture. It's just basically saying the IRR is, hey, they're both efficient at getting your money back. But we know that they're not on the same footing, or they're even on the same playing field when one's giving you 20,000, the other giving you 10. Mm-hmm. at the end of 10 years. So you have to look at more than just the IRR. So you're looking at, you want to look at cash multiples, you want to look at cash on cash return. And then, if, with lower returns, you kind of want to talk to them and kind of maybe talk a little bit more on the efficiency from which they're going to get their money back. Mm-hmm. So, hey, look, we're in the core market. We're going to also benefit from appreciation, which we're really kind of hanging our hat on being in these core markets. And we're efficient. And also, we all predict headwinds. But being in the downtown St. Petersburg market, this is what I feel that will shelter us from, what I think a lot of other investors that may be in other areas, they may be impacted by X, Y, and Z, but I feel like we may not be impacted by that because we're well insulated within this particular community. Look at the employment, look at the leisure, the entertainment, within this certain mile radius, this ecosystem that is downtown St. Petersburg. Which is one of the best fiscal economies out there. I feel like even if there is a downturn, then, I feel like we're well insulated. So it's really just changing that speech and really trying to talk to them about efficiency, because we all know you're not necessarily going to get efficiency or risk-averse investments in Wall Street coming in the next couple of years, if not even right now. I mean, there's just too much volatility. So you just have to kind of listen to what their concerns are and really say, hey, look, this is what I'm offering, and really stick to your guns and not promise things that are not going to be delivered.
So we talked a little bit about having boots on the ground and understanding how to actually operate the asset, talked about attracting money. And what else would you say that typically syndicators maybe take a little for granted and don't completely understand?
I mean, heck, I think I covered it.
You covered it all. I'm going to add one. I'm going to add one for you because it's something we get all the time. The SEC, and that's the Securities and Exchange Commission. Mm-hmm. And you talk about the 506 and the various forms of private placement memorandums. People don't understand. Technically, if you go back and look, there's a 3-pronged method of judging whether something is supposed to be a security. People ask this all the time. Hey, I'm only getting my brother and my cousin and my next door neighbor and my boss together to buy this deal. Well, guess what? Yeah, that's a security.
Still security.
That's a security.
Absolutely.
You're earning money for somebody else who expects a return, and it's basically a passive investment. There's 3 pieces of this that if it meets the test, it's security. And even though it's all people that are close to you, that doesn't matter. Now, do people do this type of activity without getting registered? Yes, they get registered. They do that all the time. Is what's going to happen to you though? But trust me, I used to be in the securities business. I used to help to oversee some of the issues that were held there. The people most apt to sue you are the ones closest to you. Those are the ones that are most apt because you take them a little for granted, and they, because you might not communicate with them effectively, and they take you a little bit for granted in terms of what they think your expectations are, and it's always that brother-in-law that's going to come after you. It's just the way it works, and and when that happens, you could trust me when I say this to you. You do not want that going before SEC because that's criminal.
Yeah, absolutely.
Yeah. That's one thing. It's going to be civil. When it becomes criminal, that's a different thing. So make sure your bases are covered when you're doing syndications. You understand when you're talking to a third party, and that third party, in other words, not you, is expecting a return, and he's not going to be involved in the day-to-day business. That's a security, and you need
to offer the security.
You offer security. So that needs to be something that's concerned that for you, and to make sure it's a different story. If the person's going in and I'm going to do the asset management, and Bryan, you're going to do the accounting, and then we've got Mary, she's going to do the leasing, and we're all using all three of our money. We're all involved in the project. That's not a security because everybody's actively involved in the management of the deal, and they have their hands dirty. Everybody's earning a salary, and everybody's expecting to participate in making the thing a success. So I hope that clears up for some people because it's a question that we get a lot.
Yeah, it answered a lot for me. I just got a message from my brother-in-law. I'm not going to return the call. You live and learn.
That was me.
Hey, Bryan, I know you've got a lot going on over in St. Pete. You've got some groups that work multifamily. You're teaching people about syndication. You're trying to get together people that you're trying to track funds. You're trying to do number two there. So tell us a little bit about what you got going on, what kind of events you have happening that you might want to let listeners know about.
Absolutely. I think the most exciting thing that I have coming up for 2020 is the Multifamily Matrix, which is a complete ecosystem matrix. Let's just you keep that because, matrix is where you develop. And, this is where, I wrote a book called Buy It, Rent It, Profit. We all know it became a bestseller. But how do you actually buy it, rent it, and profit? And so, it's something that doesn't happen overnight. It's just something that you have to, you have to go in and develop the mindset. And I think we've kind of established that, the skills and the, have to be insulated with the system and the right group of individuals. And that was something that I hadn't quite figured out how to do it. How do we help our readers that have read this book all over the world? And how do I actually develop syndicators? How do I develop, educated investors, individuals who are going to buy and own apartment buildings? And so the Multifamily Matrix is where they go. They can receive education and training. They can use the underwriting models. They have access to the attorneys. They have access to, any kind of documentation forms, the ability to create their own as they level up, websites, and just anything that they can think about. You're not having to go to various different places to try to piece this all together. You want to know about the syndication process, you're here. You take training. You want to learn how to become a thought leader. You can not only learn about being a thought leader, but now you have access to materials that I've developed based on Buy It, Rent It, Profit's brand that you can access to do presentations and investor pitches. And, if you're just a single operator and you're out there buying your own apartment building, small units, between 4 and 8, how do you operate all the systems, all the forms that you need to manage your property day to day? Everything is in really one location. And then, for me, the icing on the cake is a weekly call with me, coaching call that everyone has access to. And we're doing the weekly coaching call, making sure everyone is on task, establishing goals. And hopefully our goal is to create the next batch of really high-level syndicators and partnerships and opportunities moving forward. So, that's the Multifamily Matrix. And then we do our meetup pretty much. We stopped last month. We're going to do our multifamily apartment social meetup starting in January. So we're going to give a break during the holiday season for everyone and then regroup in 2020. But that's designed to basically put the best minds in the business in one place. So I hope to see you guys there in 2020. Come out, have free drinks and eat and just have a good time and try to put some of the best minds. Let those there are tons of high net worth individuals that want to meet individuals that are putting together deals, and we're putting those individuals in the same room with very high level operators, and that's what the social is about, and that's free for everyone every single month. So that's really the things that we have going on for 2020 that I think are exciting for your listeners to get involved in.
How about a website, Bryan, that you can give us that we can everybody can go to and find all this information out?
BryanChavis.com. /matrix. If they're interested in the matrix, it's BryanChavis.com /matrix.
Awesome.
And it's Bryan with a BRYN, just to take
yes,
note
sir.
of that.
BryanChavis.com.
Awesome. Bryan, as always, we appreciate the time that you spend with us, and we learn, and it's always educational. And the best part about some of your events is that we also get free food.
Yeah,
and
you
drink.
see, I knew he'd remember that part about free.
Yes, he would, Steve. You pegged him. He's going to remember that. That's why we do it.
Hey, Bryan, always great talking to you. So we look forward to seeing you soon.
Yes, sir, guys. You continue success on your podcast, continue blessings in your business, guys.
Thank you, sir.
Bye.
And that was Bryan Chavis talking multifamily investing. We always appreciate having Bryan on the show and listening to his thoughts. He always impresses me. Not only is he a very knowledgeable guy, but he's a guy that always wants to learn more. So he's constantly trying to hone his skills. And that's one of the things that's necessary in any kind of business. People that are successful, they are chronically on a quest for more information and to make themselves better. Stephen, what were your thoughts about listening to Bryan in this episode?
Well, I'll say one additional thing about Bryan, because Bryan's out there, and as much as he wants to learn, he's also willing to share. He's not looking to sell per se. Everyone's in business, but he's willing to share and create relationships, and other things happen from that. But Bryan had some really cogent things to say. One is everybody wants to be a syndicator, but it's really understanding the back end of the business and what to do and when to do it, and the systems that you need to have in place before you go out and syndicate. Because even if you get the money and you get the investors, that's the easy part. The harder part comes afterwards.
It's one of the points that he makes about raising money, about how you do it. It's old school method, and it works. Know me, trust me, like me, do business with me. There's a process that people go through to be able to get to that point to make an investment with you, and it's amazing to me how many people call me, and I get telephone calls every week from folks trying to sell me deals, trying to include me on things that are happening, and it's just regurgitation of information. Let me send you over PPM. Let me try to get you to take $150,000 and put it into our deal. I don't know who the hell you are. I mean, W2TF. I mean, how about just stepping back and trying to learn something about me first? Knowing that I don't like taking telephone calls during business hours would be the first thing, but try to find some other way to get in touch with me and figure out a way that we can kind of get to know each other a little bit first before you do an assessment of what my goals in life are and where I'm headed to before you just try to cram this deal down my throat. And it's amazing to me that people just don't have more dexterity in their approach to people. I mean, realistically, if you're an investor, you only want people in your deal that are aligned with your goals and values. If otherwise, you're just going to have a nightmare. So why would you even try to sell something to somebody before you know, like, and trust them too? So it's a process, and Bryan definitely understands that, and it's just a reminder to me, how some people understand this and some people don't. And unsuccessful people tend not to understand that.
Yeah, and the other thing that, just talking about Bryan, that, you mentioned he's always looking to learn, and he found that in an area like St. Petersburg, you're just not going to find a lot of product, and there's the size of product that he would like to have. So he came up with a strategy of stacking and achieving the same goal, but also the importance of being focused if you want to stack.
Yeah, no doubt. He's creative. Is always looking for a different way to skin a cat, and that's certainly didn't go unnoticed with me. Hopefully, with the listeners either. Stephen, Bryan was a great guest. He's the second time he's been on the show. Again, I'd recommend episode 149 if you want to hear a little background on where he came from and how he got to where he is today. I think it's worthwhile to listen to. How about other great guests, Stephen? Where can people go to find other great guests on the Invest Florida show?
Well, the one place to go for investors in Florida is www.investfloridashow.com. That's our website where the podcast is hosted. But also, take it a step further. Download the app on your mobile device so that you can listen while you're in the car or in the gym.
Guys, as always, we appreciate the time that you invest with us each and every episode. And until next time, hasta la vista.
You've just listened to the Invest Florida podcast with Eric Odom and Stephen Silverman. Join us every week for actionable real estate investment ideas, and of course, visit our website at www.investfloridashow.com for more shows and tips on how to earn a cash flow in the real estate market in Florida. While hosts and producers of the Invest Florida show have no reason to doubt the validity of comments of our guests, we do not warranty their accuracy. Please check with your legal, financial, and tax advisors before entering into any investment. Returns will vary from person to person and deal to deal based on unique circumstances. All information expressed in this show is for educational purposes only. Opinions of the guests are not necessarily shared by the hosts and producers of the Invest Florida show.